Okay, now let's talk about number 4. What's going to happen with number 4? What does it say? Build customers for services performed. What do you think in that transaction? What are we going to do there? What? Accounts receivable. What is accounts receivable? It's an asset. So our assets are going up, right? And what's happening to our stockholders' equity? Do you see how it always needs to be in balance? What we do to one side of the equation, we have to do to the other. Does that make sense? Yes? No? How about number 5? Who's Grant?
Me.
You're Grant?
Yep.
Congratulations on your test.
Thank you.
I think.
Yeah.
Sorry. Was that bad to say? Is that client confidential or patient? You guys might be patient soon, huh? Is that student confidentiality? No, I'm not saying anything, am I?
It's not bad.
You got a good grade, it sounds like, so good for him.
Okay, I'm sorry.
It's all good.
Okay, Grant. Number 5. Read it.
Number 5, pay dividends to stockholders.
So what's going to happen there?
Cash will decrease.
Cash is going to decrease. Do you guys agree? And what's going to happen to stockholders' equity? It's going to decrease also. Does that make sense, guys? Does it help doing these together?
Yes.
Am I going slow enough, or do I need to go faster? Okay, you want to hear Farrell again, or whatever his name is? Farrell? Someone's heard Farrell. That wasn't good. Okay, number 6. Who wants to do number 6? Now that I see all your names and then I see your quizzes, I want to start getting to know each person. You know, and like you guys email me, so now I know who the email person is. Was there an email person here who worked in security, or was that my other class? Must not have been in here. Number 6, read it. Incurred advertising expense, and what's it say on account? So what's that mean if it incurred advertising expense on account? It's going to be a liability. They haven't paid the cash yet, have they? So what happens? What's going to go up? Assets. We're not using cash yet. A liability, because on account means an accounts payable, right? So an accounts payable is going to go up or increase. So there's going to be an increase in L. Do you guys know what L means? Isn't this tough? And then what else is going to happen? A decrease in stockholders' equity. Now, I don't get that. A lot of these things, what we were doing, guys, is if we did a plus, we did a plus. If we did a minus, we did a minus. How is one side a plus and the other a minus here? It's on the same side of the equation. Do you guys get that? Assets equal liabilities plus stockholders' equity. If we increase our liabilities and decrease our stockholders' equity, are we still balanced? Kendall?
Yes.
Okay. How about number 7? Jessica. I probably wasn't here early enough this morning. Come see me after.
Okay.
Jessica, can you read that?
It says received cash from customers billed in full.
Received cash from customers billed and in 4. So what's going to happen there? What? cash is going to increase. So we'll have a plus for assets. And what's going to happen? What else is going to happen, guys? This is a tougher one. Accounts receivable is going to decrease. Who agrees with that? Do you understand why accounts receivable is going to decrease? Because we got it. So when you have an accounts receivable, that means you're expecting to receive it. Once you receive it, you don't have it out there anymore, do you? So if accounts receivable decreases, do you see what's happening here? We have a plus to assets and a minus to assets. How can we have a plus and a minus? Same side of the equation. Do you guys get what I'm doing? Am I confusing you guys when I say same side of the equation? So we mean assets equal liabilities plus stockholders' equity. They're both over here, right? So there's a plus and a minus over there, right? Usually we've got to have a plus here and a plus here, or a minus here or a minus here, or we can have a plus and a minus here. You see how we've got to be balanced? Is that making sense, guys? Okay, how about number 8? Marcus. How about number 8? Can you read number 8, good old Marcus? Purchased additional equipment for cash. Marcus, what are we going to do? What happens to our cash? Decreases. So we're going to have a decrease in assets. And then what's going to happen? What's equipment? An increase in what? An increase in asset. Do you see how, again, we're balancing because it's over on the asset side? Okay, guys, last but not least. Avery, you keep yawning, you're in trouble.
Alrighty. Purchase equipment on account. So equipment's gonna go up, and I'm gonna say liabilities is gonna go up.
Increased assets and increased liabilities. How many people agree with Ave? I do too. Guys, what my goal is the more we can work together and you kind of get this cemented, then what I'm hoping you can do is then when you're on your own, what my hope is you work through some problems on your own and you've got the solutions in there. And so if all of a sudden something's not making sense and like, wait a minute, I thought this should have been something else, email me. I'm trying to be pretty good at getting back to emails. Okay, I'm trying to get into, my iPad has it all, it's instant. I need to get my other computer and my phone set up where it's instant. Anyone know how to do that in here? Set your phone up? I don't. If someone wants to be so kind and set my phone up, do you know what I'm talking about? With my, I have my personal email on here, but I don't know how to set up Augsburg to go into here. You guys get what I'm asking? It shouldn't be that hard, but anyway, don't even get me started. Do you guys want to go and do another exercise, or should we continue on? I'd rather you feel good about what we're doing. Where are you at? You're feeling good? Who's feeling good? Who wants to do exercise 3-2, or who wants to move on to the PowerPoint and keep going?
Let's keep going.
Okay, so that means do exercise 2 or keep going.
Keep going.
Meaning go back to the PowerPoint.
Back to the
Yes.
PowerPoint.
Okay, back to the PowerPoint is what it is. Yes.
I don't understand how you can have a debit balance or a credit balance of higher. You know what I mean? When you were showing earlier.
Guys, you know what? You get extra credit for just like being vulnerable. Thank you. I wish more of you guys would ask questions like that. And if I do anything that can appear intimidating, come and tell me and go, hey woman, you're doing this. Because please hear me. These are tough things to cement in your head. And then once you get it, it's just going to flow for you. But those initial things are challenging. Okay, you have a hard time understanding how it could be a normal debit balance or a normal credit balance. Who else kind of wonders what we're talking about? Yes, no? Okay, read that one. Read that first one. The first problem we just did.
Issued common stock to investors in exchange for cash received from investors.
Okay, so we issued common stock in exchange for cash. We're going to make this an account called cash, okay? And we're going to make common stock an account over here called common stock, okay? And we're going to do these little T accounts and we spell them out. So what is, sorry guys, what happens to cash? For how much? Okay, let's guess 10,000. What's going to happen to our cash? It goes up. That's all we know. It goes up. It goes up 10,000. This is an asset. So what do I know about an asset account? What's its normal debit or balance? Debit side. And what happens to common stock? This is a stockholders' equity account, and what do we know about stockholders' equity? What's its normal balance? Credit. That's going to increase. Okay, what's the next one? Paid rent. So rent is going to be a decrease. So common stock increases stockholders' equity. So it's going to have a normal credit balance. I want to skip the paid rent because I don't want to confuse you. Do another one right now. Received cash from customers when services were performed. That's an income statement. I don't want to confuse you. How about another one? Purchased additional equipment for cash. So what kind of account is equipment? It's an asset. So what happens when we use cash? Cash gets decreased. Let's think this is $5,000 piece of equipment. What am I going to do with cash when I use it? I'm going to credit cash for $5,000, but now I'm getting a piece of equipment. What am I going to do when equipment increases? Debit. Do you see how the debits here equal the credits? I debited 5,000, I credited 5,000. Do you see over here I debited 10 and I credited 10? Does that make sense? Let's just do another one. What's another one? Purchased equipment on account. What is an account? Accounts payable is a normal liability, right? So when I purchase equipment on account for $3,000, what happens to my equipment? It gets debited. It goes up. What happens to my liability? It's going up, isn't it? 3,000. Do you guys see how my debit of 3,000 is equaling my credit of 3,000? Am I making sense?
Yes.
How many of you guys are confused what I'm trying to say? What if we pay dividends of $200? Cash goes down, so what am I going to do? Debit cash or credit cash? Credit cash 200. And what happens to my dividend account over here? Because dividends taking away, you know, this common stock increases your stockholders' equity. Dividends kind of decrease it. What happens? I'm paying dividend of $200. I credited cash. What am I going to do to my dividend? Do you see how my debits have to equal my credits? Do you see that in cash, when all is said and done, I have debits of 10, credits of 5,200?